Hello everyone, I'm Greg Donovan. I'm an accountant. I started my practice in 1997 and I have a bachelor's in accounting, a master's in accounting with a focus in taxation. One of the things I wanted to discuss is for you guys that got the SBA, the PPP, the Payroll Protection Program, you were able to take advantage of that. There's a couple of things it's just something that popped out that I really want you guys to understand, and so it's really important because I don't think a lot of people are thinking about this, but it really is important. What this example that I'm going to put up there, the average SBA this PPP loan was around 110,000, so that's the average. But I'm going to go with 125,000. So you got payroll, I'm saying 100,000, and this 100,000 is for 2.5 months. So, you know, somebody with a sizable payroll, and the overhead 25,000. Those of you that've got the PPP understand what that is. It's for like your mortgage payments, rent, utilities, phone, internet. So anyway. The total loan is 125,000. That's what we're gonna, or my example. Okay, the journal entry that you need to make, okay, is you would debit cash, which is basically where you deposit your check into. So wherever the funds went into, whatever account, that's your cash account for 125,000, and you set up a liability account, long-term liability account. The way I would label it is notes payable SBA, or you can say PPP, whatever you want, and for 125,000. So that's when you get the funds. And what I'm pretending is you got it this month, May of 2020. Okay? All right. So you know what you got to spend this on. You got to be very particular what you spend it on, otherwise it won't be converted to loan forgiveness. Now the word loan forgiveness sends me pause because it makes me a little concerned, but nothing I've seen would imply what I'm about to tell you. When you get loan forgiveness, okay, that usually means that you're going to get a cancellation of debt, okay, document, IRS document, which means that it is taxable income. And that's what, I haven't saw anything that tells me that that's the way they're going to handle it, but I haven't seen anything that said for sure they're not going to do it this way. But as of right now, according to the AICPA.org website, okay, the way it's going to be handled is this way. What we're going to say is all the money that you got for PPP was forgiven, okay, and it's not going to be income. So we're going to go off what the AICPA.org says. Okay, that's how I'm going to go with this. Okay, and you would do, so you get the document and you call the SBA, not call, the SBA, you furnish all the information to prove that, hey, I used this money for approved expenses. And they send you a letter back, and let's say you get the letter back in September 2020, says the 125,000 is forgiven. Okay, so your second entry that you would make, and this is the one that's really important. You would debit your notes payable, the SBA 125,000. That's that long-term liability that you set up, okay? And then you would credit payroll for 100,000 and credit overhead for the 25,000. Of course, overhead is going to be rent, utilities, whatever. You're going to have to go through and make credits to those expenses, okay? And those of you that don't know accounting, when you credit an expense, you're reducing your expense. So you're actually reducing it. So that means if, for example, for the year, let's say for the year your payroll was 800,000, okay, for the year. Well, when you make this credit to payroll, 100,000, you're actually on your profit and loss statement is going to be 700,000. Okay, so you reduce it by 100,000. Okay, the IRS, or well, I guess you could say the federal government, is not going to allow you to take full payroll expense when you've accepted, basically to you would be free money. Okay, So, and over the 25,000 and that sort of thing. So you got to credit this too. So when you do that, you're reducing these items when you credit them on the expenses. When you're talking about expenses, when you credit, it reduces it. So that means that your expenses without this journal entry are going to be overstated. So that means when your accountant gets this and he doesn't do his due diligence about the PPP and he writes off all of those expenses, that means that if you get IRS audited, and they're usually 2 years behind, that means that you will get penalized and penalties and interest on the $125,000, because that means that your net profit, let's say your net profit was $20,000. Now, since they discovered that $125,000 wasn't credited to the appropriate accounts, that $20,000 turns into you had a net profit of $145,000. Okay, so if you can imagine $125,000 of taxable income hitting you 2 years later, you're talking about a substantial amount of money, tax liability that you probably are not going to be able to afford to pay, because everybody keeps talking like it's going to be like a quarter or two and everything's going to be great. Well, that's not going to be true for all of you, and I would say most of you probably won't be where you was as of February. My guess is next year this time you're probably you're probably going to be somewhat close to it, but not where you was. And if any of this turns into where, okay, you had 125,000, then they turn around and said, hey, we're only going to approve you for 75,000 loan forgiveness, okay? And if that's true, then this would be the journal entry that you would want to make, okay? So 75,000, so you would put 75,000 and then 50,000. Okay, so you got notes payable 75,000, payroll goes to 50,000 from 100,000. And what that means is when you make this journal entry and you pull your balance sheet, this is how you're going to know you did it right. You pull your balance sheet after you make this entry. You should see notes payable SBA should have 50,000 still there, and it should be a credit. Okay, so make sure it is a credit, because liabilities are credits. So when the liability is increased, it's credited. So keep that in mind. So right here we're debiting the account 75,000, which only reduces it by 75, so therefore you'd have 50,000 left over. So your balance sheet should have 50,000. So that's how you would distinguish between the two. I'm not real sure about the letter from the SBA, from the federal government, however they're going to do it. I would definitely want something in writing showing that this was forgiven, because you don't want to get audited 2 or 3 years from now without have some kind of backup to show, hey, that was forgiven. Or have them come back and say, hey, well, they only approved me for 75, and the IRS comes back and says, oh, no, they forgave all of it, okay? Which means that you would have expenses overstated by 50,000 according to the IRS. With that letter, throws them out. They say, okay, well, we got bad information, so they have to go away, because that letter would shut them down, okay? Otherwise, you're going to have another issue, and you don't need that. So anyway, and if any of you accountants up there think that can't happen, you either haven't been in business long enough or something's wrong, because I've seen ridiculous stuff on payroll, especially, where they showed payroll where I don't even know where they got the numbers from. And then I had to turn around and send them copies of the W-2s and W-3 to resolve it, because it was their numbers. I don't know where they got them. They were way off. Okay? So it could definitely happen. So anyway, this is all I wanted to go over and kind of explain. This entry is extremely important, and the letter either is from the bank or the federal government, whoever it comes from. It needs to be either from the bank you got the loan, which is what I'm thinking. It could be that, or it could be the feds. I don't know. I'm hoping you can get two of them. I'm hoping you can get one from the bank and one from the federal government, because it's just the more backup you have for this, the better. So anyway, this is my example. I just really wanted to go over it because I just feel like some of you guys out there, you know, I've seen, been in this business a long time, and I've seen people's books, and sometimes they're pretty bad. And you really, you have to be careful. So what I would do is, if you're one of these guys that don't keep up with your stuff and you just hand it all to your accountant and then they enter it, make sure the PPP letter, you know, the loan forgiveness letter, either from the bank or from feds, hopefully from both, and you make copies for you. Do not give them the original, anybody, okay? You make copies of those. Either you take pics with your phone or something, you have another avenue to grab those things, because you do not want to hand them to an accountant. And I've heard horror stories around here, especially in North Dallas, where they've hung on to their stuff and they got past due, and next thing I know, they hand their stuff back to them, so I can't get to it. Okay, I've heard those kind of stories here. So trust me, it's make your own copies, especially of that letter. I wish you could do it on all your receipts, but that's not practical. Most people don't have time for all that. So, but anyway, this is what my example, what I wanted to help you guys with, and I really hope it helps you. And if you have any questions about it, you can always email me at gregd@dnataxes.com, and we can go from there. I don't have a problem answering any questions on this. So anyway, hopefully you're the lucky one and that got it. There's a lot of them that didn't. So, and so anyway, you guys take care, and just stay safe, and hopefully they can open up Texas really quick, because I'm getting tired of this stuff. So I'll talk to y'all later. Bye.